What to make of the markets and where you should place your bets? Let's try to decode that. And for this, we have been joined by Dipan Mehta, joining us on the show right now. Hi, Dipan. A very good afternoon, and thank you so much for your time. First up, Dipan, the earnings season is at the flag end. Give us your sense that which are the pockets that are looking attractive to you at this point in time, and what do you make of the markets?
Good afternoon, and thank you for having me on your show. See, I think that broadly this earnings season has been a bit of a disappointment. And across the board, I think large sectors like banks, NBFCs, software, they have disappointed. And also, I think across the board, it seems that there are a lot of issues in terms of earnings growth, which of course may get resolved going forward with better monsoons, lower interest rates, and tax cuts. But this earnings season has been a mixed bag. And what this earnings season also is telling us is that the market is going to get extremely selective. And the broad-based rally which we saw for the last 3, 4 years, that may not continue into the future. Coming specific to your question as to which are the sectors where numbers were good, I thought we had saw the first good signs of pickup in consumption, especially urban consumption. So be it QSR or be it retail, be it hospitality or even healthcare, all of those sectors, travel, tourism, aviation, all of those did well. So that is, I think, one clear conclusion from this sector that consumption stocks started to do much better. Other than that, I think broadly it's been a bit of a mixed bag. But within sectors also, which are disappointed, there could be a few winners. Like in cement, I thought ACC, Ambuja, Birla Corp came with good set of numbers. So like that, if you go sector by sector, there are some winners. But by and large, I think we come out of this earnings season with lower ideas or lesser ideas than when we enter it.
The take on the earnings season, what Dipan is liking at this point. Dipan, hi, this is Snehi also joining in. Want to get your sense on the pharma sector, the sector in specific, because the kind of move we've seen from pharma, it has been underperforming the market, but today it is doing very well for itself. Names like Gland on the back of good set of numbers are keeping this pharma space in focus today. How would you play the pharma space? What would be your outlook going ahead, and which pockets or themes within the pharma pack you're liking at the moment?
Again, I think pharma is a classic example of what I said, that one needs to be very selective in the market. And within the pharma also, I think companies which have a slightly differentiated business model, they may emerge to be winners. Within the pharma space, we like the CDMO companies where we think there are good growth prospects. And overall, I think because of China plus one, they will benefit significantly. But there's still a lot of uncertainty around Trump tariffs for pharma companies, so that also needs to be kept in mind. So I would say it's important to be a bit selective and focus on companies which have a different business model. And on the whole, I think investors should be equal to slightly underweight pharma as well. Last few quarters have been exceptionally good, so base effect also will come into place from next quarter onwards. So you could see slowdown in earnings on that count as well.
Right, so be very selective when it comes to some of these pharma majors. But well, of course, today all eyes will be, and tomorrow as well, all eyes will be on Sun Pharma as the company will report its numbers. And indeed, it is the largest pharma player in the Indian markets. And other than that, what is really staying up well is BEL, because it was not just the earning that surprised the analysts, but given the commentary, the stock has seen a very fantastic run up, because in the last 1 month or so, if you see, then the stock has already shot up over 20%. I guess that number stands out at 23 to 24% on a 1 month basis. And like you see on your screen, the quarter four margins have jumped. The management upbeat on the guidance. 15% revenue growth is what they are penciling in. And off late, a lot of these new order inflows, especially from the defense pack and for drone segment as well, is what we are being looking forward to. But Deepan, given the run up, do you believe that the valuations are also attractive for some of these defense plays? And specifically, if we can talk about BEL, because this has definitely been one of the outperformers in the Nifty 50 pack.
So I think defense companies are clearly one segment where across the board we are seeing growth, and therefore investors are just piling up over there. It's a pretty small sector, I think around, I would say 8 lakhs or thereabout to the total market cap as compared to 440 lakhs for the entire NSE. So, and these counters also have very high promoter holdings, so floating stock is very low. And investors who are searching for growth, I think, kind of zero in on this particular sector, which is that valuations are extremely expensive. And no doubt there will be growth, but I'm not sure the stock prices will give decent returns over the next 3 to 5 years or so. And the P multiples can only compress from these levels. Some of the risk factors related to defense, that being execution, delays in orders, competition, and government change of government policies are not yet completely factored in at these valuations. So, as an existing shareholder, which for a matter of disclosure, we are in BEL, would remain invested, but from a fresh investment perspective, the risk return profile doesn't favor you. BEL per se also very expensive. I agree, it's right now entering into a new growth phase, as is the case with Bharat Dynamics, also HAL, and a lot of other private sector defense contractors. But look, at these valuations, I don't feel the comfort in buying into that.
Okay, so that's a take on some of the defense counters that have been up in a buzz recently but have seen a little bit of a pause in that rally. Deepan, also wanted to get your sense on Dixon Tech. It's a stock that's been in focus today on the back of its earnings. Good set of numbers coming in for the company, but on the flip side, the stock is lower by almost 6% as we speak. We have a note coming in from JM Financial today wherein they've downgraded the stock to a hold from a buy earlier and revised the target price lower to 15,650 from 16,500 earlier. And they're citing a delay in projects. This could weigh on the stock price going ahead. Deepan, despite this, the numbers, at least operationally, it has been a very strong quarter for Dixon. What are you making of this company going ahead, and what's your outlook here?
First, the disclosure, we and our clients are invested in it. And it's typically what is happening in railways, what is happening in the defense, some of the other high growth factors. The minute the numbers are slightly below street expectations, the stock is being punished. But on a standalone basis, if you didn't have any expectation, you would say that Dixon's numbers are extremely good. Management commentary also is quite positive. But the same situation that you cannot buy at these P multiples, they are just too expensive. These counters and many others in the defense sector are on the move. It's like a running train. If you try and catch it, you're not going to make a lot of gains out of them. So, like all investors, I think we are also remaining invested in Dixon, but certainly not advocating buying, making a fresh position. In fact, in some of our accounts, we have even trimmed our holdings in Dixon because of very expensive valuations.
Indeed, very expensive valuations. That's what we have been flagging since the start of the day. Even we could look at the 1 year forward multiple is already standing at 70 to 80 times. But definitely, all throughout the years, the company has delivered, and then what the analysts are factoring in that particular way. But Deepan, the other theme that is doing well in the last couple of weeks, actually, and everybody is penciling in a bigger growth story there, is the insurance basket. Specifically, what we are seeing is the life insurance as a play has been doing very well. If we can pull up the chart of HDFC Life, this is actually one of the top gainers in Nifty 50. And off late, all these other SBI, they are also seem to be catching steam. And with the insurance play, Deepan, even a stock like PB Fintech is also doing well. What's your current view on the life insurance space specifically? Because here, what the experts highlight that the valuations is not a big concern.
See, first of all, insurance is a very difficult sector to understand and value, right? Secondly, the insurance company, the private sector ones have been around for more than 10 years, and it's not exactly that they are given superlative returns. If you go back and see 10-year returns of insurance companies, it's like a single digit thereabout. Considering that it's a secular growth sector, considering that the business is in the nature of annuity, and there should hardly be any volatility in earnings. But nonetheless, the 10-year track record of the listed insurance players has not been that great. So now I'm come to the conclusion that we need to get underweight insurance per se. There are other ways to play insurance, and I certainly like the PB FinTech business model. There's also a small cap company called MediAssist, which provides TPS services to the insurance sector. They do claim processing. I think that company's got great prospects because a lot of the claim processing is getting outsourced. And as the industry grows, they will get more and more revenues from their existing customers. So while we like the insurance sector as a financialization theme, the better way to play it would be through ancillary companies which provide services to insurance companies rather than the insurance companies themselves directly.
That's a take on some of these insurance names. Deepan, I also want to get your view on the entire real estate space, especially on the back of two thrusts. First, that the sector has seen immense run up even when the market was overall lagging and the other sectors were underperforming over the last 1 or 2 weeks or so. And second, also now that the Maharashtra housing policy is in place, give us a sense of whether you see the affordable segment coming back to power, and on the back of that, some angst on that front, the likes of affordable housing financiers, or do you believe that luxury developers will still hold the upper hand when it comes to real estate?
See, when it comes to real estate companies, affordable housing is not going to make a big difference to their profitability. Whatever trends we are seeing, the profit growth, the revenue growth, the booking growth is all in the premium segment, in the kind of high value properties which they are selling. So I wouldn't bank too much on affordable housing as an opportunity for the listed real estate players. Secondly, I think that real estate prices and volumes have been significantly increasing last 4 or 5 years or so since we came out of the COVID. And these kind of growth rates, I'm not sure are sustainable. I know that real estate cycles are usually long, 8 years, 10 years, even beyond. But there could be, kind of a down cycle within a long-term multi-year up cycle as well. And I sense that next few quarters you may see some flagging of growth, lower prices, lower volumes for the real estate sector. It may not reflect in the revenues and the profits because execution will pick up for these companies. But certainly, new bookings, collections may get impacted, and that's what is driving the valuation. So I'm getting a bit cautious on the real estate sector, and it's on my radar. It's a great sector to be in for the long term, but I'm just anticipating slower growth rates for the next few quarters or so, purely on account of mid-cycle softness.
That's the take coming in on the real estate pack. But moving on to some of the other news flow, and a day after the Foreign Secretary briefed the delegations going abroad to share India's message of Operation Sindoor, two groups have left for the global capitals. Remember that the 7 groups are heading to the US, West Asia, Japan, and other regions to send a message against terrorism. Sumita Karir joins in with all the details. Take it away, Sumita.
Yes, in fact, India's message as far as Operation Sindoor is concerned, India's messaging to the world has begun. The diplomatic outreach has begun. At least 2 sets of these 7 delegations that you were talking about, 2 sets of these delegations are leaving today. The one led by Srikant Shinde, and of course the other one that of course is led by Sanjay Jha of the JDU. Then there is another delegation that's all set to leave for Russia and other neighboring countries that will be led by Kanimoy of the DMK. The messaging is going to be a pretty cohesive one, which is going to be centered around the fact that India is now taking a no-nonsense approach to terrorism. There is no tolerance for terror, and any act of terror is going to be equated with an act of war, is what sources are telling us. Sources also tell us that these delegations that are visiting these several global capitals will be engaging with policy makers, heads of states, of course, the Indian community in those countries, and of course think tanks as well, to pass on this message, to give a briefing about how Operation Sindoor was executed, was conducted. These were precision strikes. There was no damage done to any civilian population in Pakistan. However, India did manage to very successfully hit the terror hotbeds in Pakistan and Pakistan occupied Kashmir. So that's one messaging that's going to be going out from India. The other messaging is going to be around the fact that terrorism does not just impact one country. It is a malaise that impacts all people across the globe. So this outreach is being made, and most important thing to understand here is the fact that these countries that India has selected to make that diplomatic outreach, these are permanent and non-permanent members of the United Nations Security Council. Remember, Pakistan is a non-permanent member of that. It's also making its own outreach that seems to be a copycat of India's diplomatic plan of action. However, important to also note that India is not making any diplomatic outreach as part of this 7 delegation grouping that's leaving today. India is not making any outreach to countries like Turkey and of course China. So very important, crucial visit being undertaken by India's lawmakers. Of course, there are members of the diplomatic community as well. There are ex-ambassadors and of course members of opposition parties taking that message across to the world that India and Pakistan should not be hyphenated. There should not be any hyphenation, given the fact that India has been a victim of terrorism since decades. warheads and Pakistan the perpetrator.
Sumita, thanks for that.